You are listening to chartingwealth.com for Tuesday, the 23rd of January, 2018. Special training for all of our subscribers. The link to our Heiken Ashi candlestick training will be in today's email. If you aren't a subscriber, you need to be one. How do you do that? You go to chartingwealth.com, put in your name, email address, and you too will receive the links to all of the special trainings. We're going to be launching them pretty much every single day. This one has had over 60,500 downloads. It's probably one of our most popular trainings that we have done. Heiken Ashi means average pace in Japanese, and it's the only kind of candlestick that we use. And it is just an amazing candlestick. You can learn all about it in that training. Look for the link in your email. Now let's jump into these charts. We see that the S&P 500 up 0.81%. This is a market, my friends, it just keeps going. Remember when we had the weekly vertical crossover back in September on the week ending the 29th, right at the beginning of October? Jumping in point somewhere around 250. Where did it reach over the course of the day on Monday, the 22nd? A high of 282.69. Is $32.69 in what? 1, 2, 3.5, almost 3.5 months or so? Is that a pretty decent gain on a $250 ETF? I would say so. And that, again, is the beauty of the weekly vertical crossover. What do we see going on? Derivative oscillator gaining energy, price percent oscillator shooting up, price movement well above the weekly and the two-day trend line. At some point, this too, my friends, will come to an end, but it hasn't yet. So hopefully you're still riding that virtual trade, watching this baby go up even higher. We see that the two-day chart started off with quite a spike up. Now remember, this is the latest of our two-day candles. It did close, and again, price percent oscillator moving up. Derivative oscillator had been sliding sideways, actually peaked up a little bit, and we closed just a little above the Bollinger Band. That is our volatility bands, and again they stretch out as movement increases, and we see them getting wider. They had been tighter and they've stretched out as the markets continued to move up. And again, we will just continue to watch this baby as it accelerates. We look at the 4-hour chart, moved up in the morning and even stronger in the afternoon. It had been laying on the red signal line. Derivative oscillator had gone negative, real negative, topped out in its negativity on the 19th. And then, of course, that may be ending. It's still red at the end of the day on Monday, but may flip over in the morning. That's beautiful as movement after a sideways slide has continued up. Again, we see that the price percent oscillator is moving away nicely from the red signal line. How long will this go up? We don't know, my friends, but when it starts to pull back and we see a crossover going down on the 4-hour chart, and then we see a violation of the two-day trend line and the two-day chart starting to turn over, at some point we'll look to pull the plug, take our profits, and then look for a potential down trade. Because remember, when you have some market knowledge, you can, of course, look at some options trading when things are backing off in the market, or you can go into an inverse fund. We do have a good training on that. Maybe we'll push that one tomorrow. Inverse funds, how to make money when markets crash. Not too early to plan for that, because everything that goes up does come down. Now, let's keep moving through these charts back to the weekly. From the S&P 500, we go to the Qs, the Nasdaq 100, the tech stocks. Remember, we had that beautiful weekly vertical crossover going up back on the 5th of January. And it has, and the jumping in point somewhere around the 158 mark or so. And of course, where did it close on Monday? A high. Well, the high was 168.12. The close was 167.15. But again, is that not an incredible appreciation? Somewhere from $158 or so up to $168, $10 on $158 ETF within the course of just a couple of weeks. Quite beautiful, quite, not even 2 weeks. So again, quite nice. And we will just continue to watch things and monitor them. Derivative oscillators gaining upward momentum, price percent oscillator 2. And again, it's just beautiful to watch the magic of the weekly vertical crossover. 2-day chart, price movement well above the 2-day trend line. Price percent oscillator gaining energy. The derivative oscillator gaining energy, price percent oscillator spiked up even higher. Keep your eyes on these things, folks. Again, the turn will always occur first on the 4-hour chart, but not yet. We see the derivative oscillator gaining upward momentum, switched over in the morning from red to green, and again spiked up even further in the afternoon. Price movement continues up. Price percent oscillator, again pulling away markedly from the red signal line. So things look sweet. Back to the weekly chart. Let's go to bonds. What do we see there? Up just a little bit, 0.10%. We had a weekly vertical crossover going down back on the 5th. Now that was going down on bonds. Bonds went down the next 2 weeks, and so far as the Heiken Ashi, we do want you to study that training tonight. Please listen to it. It's only a few minutes. Really, really good on helping understand how it's computed. It's computed differently than things are computed on regular candlesticks, and it shows us the average pace of change, which is down, and we see that the new candle is being formed down on the Heiken Ashi. Derivative oscillator gaining downward momentum. Price percent oscillator not going down at quite the pace it had been over the course of the last week. Again, remember, this is only the first day of the latest 5-day candle, but it is down at this point. What's the 2-day chart showing us? Again, we see spinning top, some indecision in the morning, down movement in the afternoon on the average pace candlesticks. We see the price percent oscillator continuing to move down markedly, and the derivative oscillator also. Price movement well below the 2-day and the weekly trend lines on that 2-day chart. And as we look at the 4-hour chart, what do we see happening? Well, the 4-hour chart showed us some up movement in the morning, followed by down movement in the afternoon. Again, an acceleration of the derivative oscillator going down, price percent oscillator also moving down at a more increasing pace, sort of more sideways on that past 4-hour derivative, 4-hour price percent oscillator. Tell you, the oscillators can get confusing at times, just the names, but again, we'll continue to sort of keep an eye on things because we're right around where things had bottomed out back on Friday the 19th, and we want to see, is this going to be a bottom or not? Are things going to keep blowing down? We shall just watch, because things did sort of back up and then started moving down again. We'll keep an eye on that and just see what we see. Indicators are showing us it's continuing down. So we'll watch it over the course of the next week. Our last chart to look at, gold. What do we see going on gold? Well, of course, gold is up for the day, 0.18%. We look on the weekly chart. We see that gold crossed over going up. Again, we had 3 weekly vertical crossovers on the same day. That was Friday the 5th. We saw the Qs up, gold up, TLT, 20-year bonds down. And we see that over the course of the last prior 2 weeks, gold was up. This week so far, gold up. Derivative oscillator gaining energy, price percent oscillator moving up the same angle over the last 2 weeks. As we look at the 2-day chart, we can see that gold is really flattening out on that chart, and it closed below, well, it never made it above the 2-day trend line. So again, some caution there. Gold really peaked out back on Tuesday the 16th, and it has not garnered that again. Derivative oscillator losing energy, price percent oscillator has gone flat. And of course, what's going on the 4-hour chart? It again is messing with us, my friends. It's not giving us really anything as far as accurate readings. It's been sliding sideways. It did sort of a double take on us, and then the sideways slide. Remember, oscillators don't work well when you don't have movement, and sideways is not movement. It makes oscillators get real funky and squirrely, and that's what we see going on. price movement. We'll wait for things to clear out. 2-day chart still up, weekly chart still up. Perhaps we'll see, because the derivative oscillator is losing downward momentum, price percent oscillator still heading down. We'll just continue to watch on gold and see what we see as far as the 4-hour chart goes, because it's really not giving us much there. However, where are we on our weekly vertical crossover? Well, I mean, it's still in an up play. So again, we do have a penetration of the 2-day trend line. We will be needing to redraw that. Still above the weekly trend line, but giving us some hesitation and some concern. Keep your eye on the 4-hour chart if it really starts spiking down. If you're in a practice trade, then of course pull it if you have not already. But again, the magic of the weekly vertical crossover is hard to beat. Now, the 4-hour chart's been really good to us, but it's gotten sloppy of late. We'll wait for it to start working again before we start relying on it. And for that to happen, we've got to have some price movement. Folks, that is where we are as we end the day on Monday the 22nd, go into Tuesday the 23rd of January. We do have something special for you. As you know, we use TC2000 and freestockcharts.com from the Warden Brothers. We have a link that is in the email. If you are interested, if you've been thinking about subscribing to a charting service, of course, we use freestockcharts.com and, of course, the paid service TC2000. If you're interested in the paid service and all the benefits it has, or learning more about what those benefits are, we have a special $25 off your subscription, and we will have that link in the email on the daily market review going out to all of our subscribers. Please do consider subscribing to TC2000. 3 different plans. They're all fabulous. We absolutely love it. It's the only charts I use. And if you are following us every day, it's probably the only chart you use. When you get ready to make that leap into a paid service, we very much encourage you to consider them. And please go through us. Helps us out. Putting this on for you free every day is expensive. You'll help us cut our expenses a little bit, and you'll save $25 at the same time, and you will have the best charting service out there. Remember, if you're an Apple user, you'll need to use Safari in order to have the charts work properly. That's what we do. It works great. All the best, my friends. God bless from the whole team here at chartingwealth.com World Headquarters.